Hello, welcome back to WinFS Trading YouTube channel, the only channel that has been optimized to make you rich trading the Forex synthetic market. In today's video, I'm gonna bring you to something very powerful and really lucrative. Only if you have what it takes to achieve it. Everything that is very, precious or something valuable, something money driven, they come in a hard way. Okay, it doesn't come easy. So when I bring content that seems to be so lucrative, it actually means you need to pay a lot of sacrifice. Most time, you really need to join my VIP to really see the real money. I'm actually practicing what you are seeing on YouTube. Most of those stuff are just celebrity content, just to keep you and get you captivated, to do the right thing at the right time, and get what you want. Okay, that's by the way, we are talking about range break index exponential trading EC Daniels models times 60,000. Okay, that's the odd level. Have a separate account for this or risk only 10% of your overall equity for this. Range break index is a kind of asset that actually have a fixed rectangle where it is ranging. The rectangle may not be fixed in length, in width, but is fixed in height or length. Okay, so it is the property of this fixation in height that is being used to run this um, idea. Okay, find the trend of the range break index in the H4. Necessary, go to MO5 time frame, trade the boundary of the range in the direction of the trend. Okay, but that's why I keep saying that you really need to pay some values in order to become successful. Either you join VIP and enroll for my courses. You see, if you're allowed to start practicing what I said here, you discover that along the line, a lot of enemy events, a kind of counter signal, are going to pull you down. Example of such is change of trend, end screen effects, market cycle problems. Uh, you know, most of the videos on YouTube are more of theory than realistic. But I try as much possible as I can to make my content, practically verifiable and, you know, but at the end, I still impart this idea that you need to leverage the effort of others. And two ways: you join my VIP or you enroll for my courses. Let's continue reading this because it's actually necessary for you to appreciate what I'm saying. Okay. Place SL 25 to 100 pips about the entry boundary such that you have at least R of 1 is to 2 plus. The TP will be in the opposite boundary of the range. Roll over 100% of the range break equity, which is 10% of your universal equity. So here you have, if this is going to be realistic as a trader, you must have at least $1,000 plus in your trading account, so that 10% of this $1,000 plus is $100. So your starting capital is $100, but then your equity should be up to $1,000 so that you can use certain lot sizes. Okay, if you have small equity, or if you just have let's say $10 or $100, you may not be able to run this because the lot size will be big most time, and the broker will not let you to run certain lot sizes within certain equity. Okay, roll over 100% of range break equity, which is 10% of universal equity plus subsequent profit during the next range trend signal. You are not supposed to withdraw your profit. You have to add your profit because this is exponential process. So the return on investment per trade is times 3 because the risk reward is 1 is to 2 plus, meaning that if you add 1 to 2 is 3, so it's times 3. Let 10% of the equity be S dollars. So after 10 rollovers, you have S upon 3 raised to the power of 10, which is basically close to 59,000 times of dollars, and basically you can take this to nearest tens to be 60,000 times odd level. The loss size is always range break equity all over stop loss pip, which I say the stop loss pip should be around 25 to 100 pips. You see, to make this thing realistic in real life, you need to fight against what you call enemy signals. To every signal, there are 100% enemy signal. If you succeed on the first trial, what if you fail in the second trial? What if you fail in the middle? You really need 10 trade. You really need 10 signals. You really need 10 rollovers. Among the 10 signals, there are high probability that, you know, some percentages of probability are ready to pull you down. So you need to know that for this to happen, you have to work extra hard and extra smart. Okay. Um, let's look on the chart and see how this thing makes sense. How it is realistic. This is a range break index. We have to go to H4 to get the direction of the assets. Pretty much you can know the direction of the assets by just looking at the swing profile. I don't want to use moving average in this kind of stuff, but look at the swing, map out the swinging profile where they are breaking levels, and then calculate or find out the direction, or just draw a line of base fit to pass through the midpoint of the, because this rectangle should be constant. Just draw a line to pass through their midpoint. It should be a rectangle of equal dimension, and then pass a line through it. You discover that you have the slope of this line is a positive slope, and so it is going up. It is different from this one. When you do it, these are mathematical stuff. You need 3 points to get a perfect straight line. Okay, and then we have this. These are break off levels. Okay, then make sure the rectangle are equal in length, and try as much as you can so that you can connect their midpoint or near their midpoint, so you can join this. Okay, once you're able to get two midpoints, the third one will be approximated. Okay, so you have this. You will see the dot, the white dot. The white dot is the midpoint of the rectangle, and then you join. So what is the slope of this line? Is negative. Why is it negative? That is it, because it's sloping downwards. Okay, so the angle, the tangent of the angle it makes with the horizontal is negative. Just go and calculate the tangent, you see is negative. Okay, so that's good. Now we know the direction is up, right? Good. Now we go to 5 minutes time frame. When we go to 5 minutes time frame, remember there are a lot of stuff that can make you fail in this kind of stuff, but I will try as much to show you that it is real. Okay, so right now we have this range. This is a range. Okay, the market is ranging here. How do you draw? You need a rectangle to cover the range. Just know the maximum height, the upper boundary, and the lower boundary. So cover it with a rectangle and extend it. Okay, now because the direction is up, you're only going to be buying. You're not going to be selling, even though it might sell. Like there is a sell that happened here, or you are not going to be selling. I will show you why you should not be selling, because in fact you should not be selling because it is, you are trading against trend. Okay, but when you have price action at near the end of the screen at least zone level, when you have the least zone level and it's acting at the end of the screen, you have to know that there is high probability that market will reverse at the end of the screen. based on the end stream effect. Okay, so here this is middle, so middle signals are strong, right? So I'm going to place stop loss below here. So this is my entry, and the stop loss will be around 25 pips. So I have 25 here, 25 to 100 pips. So I'm going to place stop loss here, and I'm going to target 1:2. I reach 25 and targeting 15 pips. So somewhere here is your take profit. Okay. I'm sorry, this is not what I mean. We are not actually trading. I'm sorry, we are not actually trading the break. This is what we call break. We are not trading the break. We are trading the range. So look at what I mean. So you shouldn't actually be afraid of the uh whether this spikes, this break will be a problem. We are trading the range. So we are waiting for price to come to one of the boundaries of the range, but then we are trading in the direction of the main trade. That means we're only buying here. So we're waiting for price to fall to this lower boundary, and then we risk around, it should not necessarily be 25 to 100 piece, whatever you think that will allow you to trade the loss side, like whatever risk that will give you tradable loss side. So we can risk 10 pips, and then the upper, if you now measure to the upper boundary where price is gonna hit soon, you see that we have 25. So the risk reward is 1:2.5. Okay, so do whatever you can do to get 1:2 risk reward, 1:2 risk reward plus, or 1:2 risk reward within that range. Okay, so another example is this. You can see this range has, we have defined this range. This is the range. So you are just waiting for price to come to the lower one, and then you set your buy. You risk 10 pip, and then you buy. Okay, you see, this subject is a kind of complex stuff, and I will be ending this video. If you really want to get this type of content, things that are more powerful that you cannot see anywhere else, you need to be my patron. Subscribe to my patron. You can see the link in the description of the video, or you join my VIP and trade expert signals that I provide on daily basis. We provide signals that are highly mathematical, and basically you can enroll for my courses if you really want to change your life overnight. Most of you came to my DM and said they want to enroll for course, but say they don't have money to do this. If you don't have money, then refer your network so that you get commission, and then be able to achieve your dream life, which is your financial dream. Bye, and see you successful.